All right, y'all. In this session, we are going to be talking about single prints, selling tails, and buying tails. Now, single prints are inefficiencies in the chart, and they are created when there are quick moves either to the upside or to the downside. Now, you can only view these in TPO charts, but the one thing I really want to highlight is that when we have single prints, it's going to happen when we have a very large candle with a very quick move to the upside or to the downside. So if we come over to TradingView, we can see that we will know basically that there's probably going to be single prints here. There's probably going to be single prints right here because we have had candles that move very quickly to the upside and very quickly to the downside without stopping at all. So there's no support or resistance levels to look for. So we can assume that if we have a very fast move up, we can also have a very fast move down. Now, how do we identify these single prints and how are they actually formed on the chart? Now, this is a TPO thing. And essentially, guys, we learned this in the last session. But on a TPO chart, we are going to have our normal candlesticks, which we see here. Okay, we have our purple candlesticks that are bearish, our blue candlesticks that are bullish. And we have two profiles. The one on the right is going to be a volume profile, just like a typical volume profile. And then the profile on the left is a time profile. And what happens is whenever a Bitcoin or whatever asset you're trading spends any time at a certain price, it will create a column of letters. Okay? Now, if more than one candle stays at the same price, it will then add another column to that row. So let me kind of show you what I'm talking about here. The candles are represented by letters, and each half-hour candle is represented by one letter. It goes from capital A to capital X, and then it starts at lowercase a to lowercase x. The daily open is represented here by this highlighted row. And basically what happens is when we get our daily open, we can see that the candle starts to wick down. And as it wicks down, wherever price touches, whatever price the candle touches, I should say, it will leave behind a letter A where the candle had touched for that half-hour period. So everywhere that first candle touches will leave behind a letter A in a column, okay? And each letter A is its own row of letters. Now, notice what happens with candle B. When candle B opens up right up here, right, it's opened up where candle A had already touched. So it is going to now put another column of letters in the same row that the letter A was putting those letter A's. But look at what happens when the B comes down into uncharted territory, right? For that day, candle 1 is candle A. It only came from the price of 38575 up to the price of 38850, and that's it. But then candle B opens up where candle A was, but then it moves down into uncharted territory. And so candle B will now start to fill in that first column. It will start to fill in that first column of prints with the letter B, okay? So basically what's happening is the more candles touch a certain price, the more columns there will be in that row. And the point of control of the time profile is the price where the most candles have touched, meaning that the price of Bitcoin has spent the most time at that price, okay? Now, what happens when we get a very fast move down and then price never comes back to touch that price again? We get a single row of prints. So we can see right here, candle F for this day came down very, very quickly. And it was the only candle to ever touch the prices of 378.12 and 50 cents to 38162 and 50 cents. Now, if we zoom in here, ExoCharts will actually highlight for us where these single prints are, and it will tell us the exact prices, okay? 38712 and 50 cents to 38162 and 50 cents. Now, next to where it says SP and it gives you the price, it will have a number in parentheses. This is the number of rows of single prints. So if we were to count up these lowercase f's that are in a row all by themselves, we would get 15. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 letter F's. We have 15 rows of single prints. Now, a lot of times people will just say we have a row of single prints from 37,812 to 38,162. So when people talk about this, they're not technically being correct when they say we have a row of single prints. Really, we have 15 rows of single prints, right? Because we have 15 rows and there's one print per row. Okay, so, but most people will say, yeah, we have a row of single prints here that needs to be filled. Now, there are very important places about these single prints that we need to keep in mind, which is this. If we form a row of single prints, okay, these are going to give us very important levels of support and resistance. And so what I like to do is I actually like to mark these on my chart. So if I know that we have a row of single prints that begins at 37812 to 38162, I will actually come over to TradingView and mark these levels of single prints on my chart, okay? Now, I don't really know, I'm back in history for the sake of example for this session, but let's say I know that I have a row of single prints that begins down here and ends up here from the drop last night. I will say right here, SPs begin, and then I will have a second line up here that says single prints are filled, okay? And this will basically let me know that they're there. Why is this important? Because if we see price come up to a row of single prints, we can expect an initial reaction from that. And then if price starts to trade inside the single prints, then we can expect them to be filled. All right, they will almost act like a magnet. Price wants to fill that inefficiency. It wants to fill that row of single prints. And once we fill it, then we can look for a reaction after it has been filled. Okay, so single prints have a top and a bottom. It doesn't matter which side of the single prints price is trading, okay? In other words, it doesn't matter if price has pumped up and we have single prints below us, right? Because we formed single prints on the way up here, right? We had some single prints that were like right here, okay, on the way up. And then we also had some single prints right here. And basically what happened is price came down and filled the first row of single prints, got a little reaction, and then it filled the second row of single prints, right? It doesn't matter if the single prints are below us or above us at all, okay? It doesn't matter if they're below us or above us. The only important thing is that when you approach the beginning, okay, of single prints, you expect a reaction at the first touch of them. And then if you start trading inside the single prints, then you expect them to get filled and have a reaction at the top or the bottom. So again, just to reiterate what I said right here, if we have single prints above us, we would look to use this as a resistance. We look for a reaction right here. And then once price comes inside the single prints, okay, it's best if we wait for those single prints to be filled and then look for a reaction once we fill that entire row of single prints. And if price is trading, let's say that single prints begin here and single prints end here, right? They'll be filled down here. And if price is trading above the single prints, then what we do is we look for our first support right here, look for a bounce. And then if price comes inside the single prints, then we look for them to be filled and look for our bounce right here, okay? So the more rows that there are in the single prints, the more of a reaction we can expect. And I typically will only consider single prints that have at least 5 rows, typically more. Okay, so when we come over to ExoCharts, this has 15 rows. And so we would you consider this a real row of single prints. Now watch the way price will react to these, okay? We put in our row of single prints on February 1st, okay? Now, later on, we can see that when we come up to these single prints, right? Look what happens on February 3rd, okay? We have this move down, and then we have a ranging day. Then when we break out of that range, look at what happens. We literally wick right up. And first of all, look what happens here, okay? We have the single prints beginning at 3, 7, 8, 12, and 50 cents. We wick right up to 3, 7, 8, 12, and 50 cents right here. And that candle immediately wicks down, okay? that candle immediately wicks down right here. This purple candle has come up to the row of single prints and immediately wicks down. So we got our initial reaction from those single prints. It might be a little bit difficult to see, but now you can probably see a little bit better that, whoa. Sorry guys, EXO is a little bit sloppy. We can see that when the candle wicks up to this row of single prints right here, it comes down. Now look what happens when that row of single prints is filled. We fill that row of single prints and then we get a reaction downward, okay? This is what we are going to be looking for, okay? And then we can see we have another row of single prints right here. And so we would be looking for a reaction from these single prints, okay? And we don't always get a reaction. And so what I like to do is I like to mark them on my chart and trade them if there is confluence, okay? I like to trade them if there is confluence. Now, what that means is down here, okay, we can see that we had a daily level, we had a golden pocket, we had a potential chickens drinking water, and we had a row of single prints right here. This is the kind of confluence that we want to see with single prints. I don't like to trade them alone. I like to trade them if there's confluence, especially if there's a golden pocket, if there's a point of control, which it would have to be an old point of control, right? Obviously, we're not going to have a point of control from one candlestick flying down through there. If there's a weekly level there, a daily level, a fib level, anything there, I like to trade them with confluence, okay? And I'm pretty sure that we came into those single prints and I think we got a pretty nice reaction from them. Let's see here. Yeah. Yep. We came into these single prints, we filled them perfectly to the dollar, and we got a bounce right from there, right? This is the kind of thing that we want to see. That is going to give us a really, really nice confluence. And so, essentially, we are going to be looking for these things and just keeping tabs of where they are because they add extra confluence, right? Look at what happened yesterday. Yesterday, we shorted from right up here, okay? In fact, let me go into the Discord to show exactly what happened yesterday. So yesterday, we took a short. Wait a second. Whoa, I got way back in history here for a second. So let me go to the present day. Yesterday, we got a short from up here, okay? Because the chickens were drinking and money flow is coming down on the 12-minute. We had some trap traders up in here and we dumped down. And I was saying, basically, that if we come into these single prints right here, we will have a very smooth move to the downside because we know that once we come into a row of single prints, it's very probable that we will then fill those single prints. And so another way to use these, not necessarily to enter trades, but to stay in trades that you're already in. This can be used for take profit levels. Now, personally for me, after I locked in my trade and I had 50% of the position out, I did set another take profit down here at the filling of these single prints. And then we can see the next morning, we had absolutely filled the single prints and we had come all the way down. And I don't know if you can see the picture here, but the technical analysis I had posted was, it's hard to see, many rows of single prints filled here, okay? Because we had many rows of single prints on the way down, and we filled them all, and we found support right where those single prints were filled, okay? And now we've kind of been ranging here all day, but essentially we had all those single prints being filled. Actually, I think I still have the TA on my chart, so let me turn that on for us. Let me turn that on. Boop. Yeah. Okay, so let me put on a higher time frame as well. We had many rows of single prints filled right down here. And look what happens, right? We come down and we fill all those single prints, okay? Smooth move up, smooth move down. And then we basically just start to form a range in here underneath where those single prints had been filled. But this is what made me set a take profit order right down here because I knew that those single prints would have been filled. And we wanted to look for confluence as well. What other confluence did we have down here? Well, we had the golden pocket right down here. We had a daily level. If we go and turn on our daily levels right here. Oh, I must have removed the daily level because oh wait, no, here it is. We have the daily level right here. We have the golden pocket right here. And then we have this previous range also, where I'm pretty sure, yeah, we have the value area high also. So there's a lot of confluence down here. It's not just the single prints I'm looking at. They actually are adding to the confluence that I am looking for. Now, if we come up from here, if I'm not mistaken, and I may be mistaken, but did we have... I must have taken them off my chart, but we also recently had other single prints that we were looking at for extra confluence, okay? Extra confluence. So basically, to recap, if price is trading below a row of single prints, we expect the price to come up, hit the bottom of that row for an initial reaction, and then if price gets acceptance inside of those single prints, and when I say acceptance, I literally mean price just comes inside. Okay, price literally just comes inside. So if we have a single print beginning here and ending here, we expect an initial reaction right here. If price even comes inside and even just comes back outside, I would like to wait and see that being filled. Okay, and the opposite is true. If we are above the single prints, we look for a reaction right here. And then if we come inside, we look for a reaction once those single prints are filled. Okay. Let's talk about buying tails and selling tails. Buying tails and selling tails. To form a single print, to form a selling tail, or to form a buying tail, you need three rows, at least 3 rows. And obviously, the more single prints there are, the larger or the stronger that level. So we can see here that we have little single prints here of 8, right? But we would look more to this 25 for a real reaction, right? Unless we had a lot of other confluence here, I would be more interested in trading this this row of single prints here. Okay, so what is a buying tail and a selling tail? You will notice that when price comes to the top of a balance, it will oftentimes form single prints at the bottom or at the top. If it's at the top, this is called a selling tail. If it's at the bottom, that is called a buying tail. Why? Because price came down low and there was a quick buy up at the bottom. Why is it called a selling tail? Because price came up high and there was a quick sell off at the top. Okay? Now, these are actually very important because they can tell us a lot about what the intention of larger players are in the market. Okay? These are basically single prints created at the top or the bottom of a candle, of a balance. And if you see a selling tail form at the top, and you can see them form very quickly, that usually is a sign that we're not going to break out. Okay, selling tails and buying tails are super common. We cannot treat them exactly as single prints because a lot of times they don't really get filled the way single prints get filled. Okay, they're in a class of their own, but they're still technically single prints. Okay, we can see right here we have 3. This is our selling tail. Down here we have 12. This is our buying tail. When you see a buying tail or a selling tail, it means that there are larger traders who have stepped into the market to keep price from leaving that range. Okay, it means there are large players who are filling large orders at the high or at the low of the balance, and it's keeping price inside this range. Okay, now we see them all the time. It's more rare that we don't see one. Now, when we don't see a buying tail or a selling tail, for example, right here, we can see yesterday, we don't have a selling tail at the top of the balance, right? We only have one row of single prints, and it has to be at least 3. What is that? When you don't see a buying tail or a selling tail, it's known as a poor high or a poor low. Why is it known as a poor high or a poor low? because there wasn't the big money up there to defend that level and push the price downward. Or at the same time, a poor low means there was not that big money down there to push the price back up. Okay? A lot of people are confused. Why is it called a poor high? Why is it called a poor low? A good way to remember it is because buying tails and selling tails are created when the big money steps in to keep the price in the range. If the big money is not there, then it will be a poor high because the big money was not there. And even if we come back into the range, we need to take note of these poor highs and poor lows. Okay, and the reason is because if a day, for example, we can see that this picture here, we don't have a buying tail, right? We only have 2 rows of single prints down here, not considered a buying tail. It's considered a poor low. And when you see a poor low or a poor high, you can think of it as there being unfinished business at that level. That should be a key level to you. We will expect price to come back to that level and do one of 2 things. Either one, a CDW, a chicken's drinking water, also known as a swing failure pattern, or a break of that range, okay? So basically, you can see that yesterday, we did not have a selling tail at the high of this range. Let me refresh this so that I can show you a little bit better, because ExoCharts is so clunky. We did not have a selling tail up here. What this means to me is when price comes back up here, one of 2 things is going to happen. First of all, it's telling me there's unfinished business here. All right, there's unfinished business here. We don't have big players defending this high. So if price comes up here, it means one of 2 things is going to happen. Either there's going to be a fake out and we'll be able to trade the swing failure pattern when we take these highs, or there's going to be a massive move to the upside. Because there's not big money here trying to push the price back down lower, when we revisit that level, there's a very good chance that we will break out of this range. Now, if you notice on the TPO chart that we have many days in a row without a selling tail at the high of the balance, that is a very good sign that we are probably going to break out, okay? So let me see if I can, and the opposite is true for selling tails. If you see many days in a row where we don't form a selling tail, it usually means that we are going to break down. Now, this is not the most common thing in the world, so if it happens that we have like 2-3 days in a row without a selling tail, you can say, we're probably going to come lower, okay? Now, look, here's a good example. This day, we had no selling tail. The next day, when we come to that level, we break down and come a little bit lower. Okay, now it's not a hard and fast rule. We have to use other confluences, but this is just another tool in the toolbox. This is just another confluence that we can use to tell ourselves, okay, look at this, for example. We have 2 days in a row with no selling tail at the top of the balance. Okay, 2 days in a row with no selling tail at the top of the balance right here. You see? Day 1, no selling tail. Day 2, no selling tail. What happens when we come up above that level? Massive breakout. Massive breakout. It's because the big money was not here to defend this level. And so it's giving us a hint. First of all, it's telling us there's unfinished business here. And second of all, it's telling us that there's no big money to defend the level. Now, notice this. This is also important. The first day, we have no selling tail. The second day, we come up into that area where there was no selling tail, and we immediately get the swing failure pattern. Okay? The third day is when we break out. So when you see the poor high or the poor low, take note that it is there. Mark it down on your chart that there's a poor high here or a poor low here. Because if you see other confluences, if you see bearish divergences, if you see traders trapped at those levels when price is trying to break out or break down, you might have a good trade on your hands, okay? You can view a poor high or poor low as a sign that large traders aren't interested in aggressively pushing the price back down or up, okay? If you constantly see poor lows day after day, you can expect lower and short the rises because the larger traders have not come in. If there is no buying tail or selling tail, you expect that that high or low will be taken out either with a chicken's drinking water or for the move to continue with a follow through. to the side that does not have that buying tail or selling tail. So I did give some examples of this already, and I did mention the fact that I like to mark these levels of significance on my trading view chart. I really enjoy trading these single prints. I have gotten some really good trades. In the next session, we're going to go over the market sessions TPO chart, where instead of using a one balance equaling a day, we're going to divide the day into the market sessions of New York, London, and Asia. And these charts are very, very juicy when it comes to single prints and buying tails and selling tails, especially when it comes more for day trading. So stay tuned for that, and I'll see y'all in the next session.